What's going on, y'all? Welcome back to the Mining Pod News Roundup. It's a duo show today with your boy Colin Harper, editor-in-chief of Blockspace Media, and Will Foxley. It's kind of scant today in terms of news. We've got a few things on the docket. We're going to be talking, obviously, about difficulty update. Bitcoin's difficulty hit an all-time high recently. It's been on a tear as hash rate just continues to come online. We'll be talking about Russia's most recent mining restrictions, which, contrary to a lot of reporting, are not actually outright bans. We've got a great pod coming out on that next week, so stay tuned for that. We're also going to be talking about a Compass hosting update. We've got our boy Karun coming back on with some surprising trends from the retail market with regards to Compass's hosting services. We also have a monster 80k unit deal that BitFuFu signed with Bitmain, just an incredible amount of hash rate. And we've got an update on one of the many lawsuits and legal actions that Rhodium is currently entangled in. I feel like it's kind of a juggling act to keep track of all of these at this point.
New Rhodium lawsuit. Let's go.
Yeah, exactly. And then to cap it off, we will have a Cry Corner talking about Michael Saylor's 100k party in Miami for New Year's. A lot of people were sad that they didn't get invited, and so we're going to be talking about it.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Thanks for listening to The Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.
I guess to kick it off, we will go to the difficulty update. I'm going to pull up the trusty mempool.space. So, Will, what are we seeing in the difficulty forecast for this coming week?
Geez, I can't believe we're over 100 trillion.
Isn't that wild, dude?
It was a while ago, but like still somewhat shocking. Yep. 2.81% estimate upward. We got a little bit until that happens. I think it's, let's say 9 days there. And our last update was about 1.16% upward. So nothing too crazy. I mean, we haven't seen like a huge move upwards in a little bit, just like more consolidation. I'm interested to talk with Karun in a second and talk about like ASIC pricing and see how ASICs are moving while Bitcoin is like down a little bit. Just looking over like the second half of the year and seeing Bitcoin just really rip higher, you'd expect difficulty maybe to have ripped even more, but we have to go back to, was it October, November when difficulty was moving a little bit harder? Any thoughts on your side, Colin? I will say there was a really slow block this weekend or this last week.
Yeah, and we can touch on that in a second. The only thing that I just want to point out is just how many successive positive upward difficulty adjustments we've had.
Yeah.
2, 4, 6. We're going on 7. I mean, this is just an incredible streak despite the halving. I mean, these miners are deploying these next generation machines like crazy. And yeah, I mean, I expect to see kind of more as we continue to go into the new year. That long block was interesting because there were reports unconfirmed. Some people said yes, some people said no, that a firmware provider had an outage over New Year's Eve. And when this was reported, the like last block when I looked at mempool.space was like 71 minutes at the time of the reports on Twitter. And I think it was resolved pretty quickly, but interesting to see maybe that was related to that. Maybe it wasn't, there's no real way to know. But yeah, some pretty slow blocks over the New Year's holiday. Maybe the miners are taking the New Year's off.
Yeah, and just to walk that out for people who don't quite understand it, and Colin, correct me if I'm wrong, because he used to work for a pool, but these Bitcoin miners will use third-party firmware in order to increase the amount of Bitcoin they can mine. So basically putting software onto your iPhone or whatever, and it makes it perform better. In this situation is for a Bitcoin miner, and you get like 2% more rewards. And a lot of pubcos and larger ASIC miners will use them, larger private companies, I should say. And they have normally like a server somewhere that's processing all these work shares from Bitcoin miners. And so the Bitcoin miners send the work shares to the server, and then the server is sending it to the pool. And something happened with that server, probably. Like, this is not confirmed. We've seen some screenshots about what happened here, but that probably led to that issue. And I think for people who are out there, it's just like there's another point of centralization we just don't talk about too much with Bitcoin mining, and it does impact Bitcoin. It could be worse, but luckily I think these things can be spun up, like new servers can be spun up fairly quickly, and it looks like it was resolved.
Yeah, it was weird. And it was specifically the dev fee server. So the way these firmware products usually work is like you can do a subscription model where like you're paying for a certain number of ASICs, kind of like the way Foreman does their fleet management tool, or you basically just pay a little tiny sliver of Bitcoin rewards from using the firmware. So it's like maybe the dev fee is like 1% and you have 10 exahashes 10 exahashes. And for all the Bitcoin that you mine using the firmware with that 10 exahashes, the firmware provider gets like 1% of your mining pool rewards. So yeah, the pool server, the dev fee server went down and it kind of allegedly crashed all of these miners. But anyway, interesting, like Will said, kind of an interesting story for just another thing that can go wrong when you don't expect it to. All right, on to our next story. One of the more interesting ones because everyone loves some FUD. And that is Russia banning Bitcoin mining. This TASS article, this is a Russian publication that broke the story, reads Cabinet of Ministers bans mining in 10 regions until 2031. So the high level here is that the Russian government has basically put a moratorium on mining Bitcoin in a number of regions in Russia that was effective as of yesterday and will remain in effect up until at least March 15th, 2031. It may end earlier than that. It may not. And then there are some other regions like I believe it's the Irkutsk region, which has a lot of industrial mining. Basically, they are going to have a blackout period during the winter so that the grid can service other customers at a time when the grid is taxed because people are heating their homes and things like that. Now, just a few points of clarity for this, and this is what we'll cover in our mining pod for next week. I had Dennis Rusinovich, one of the partners at the cryptocurrency mining group. It's a research firm and an advisory firm for Bitcoin mining. What he clarified was this is not a ban in the way that people would think it is, like a la China mining ban, which took out all of the big industrial miners in the region. What this essentially is it is a ban mostly on retail mining and on unregistered miners. So the Russian government Russia's power providers, I should say, had a huge problem with people tapping in to really cheap residential rates all around Russia and mainly in those regions that are discussed in that article. And they were having shortfalls as a result. Now, I believe, and I'll listen to the pod with Dennis because I could be butchering this explanation here, but the Russian power providers basically have, nice.
We'll Google Earth for our
you gotta love it. But the Russian power prices for residents are like subsidized or capped to a certain extent. And so it's really inexpensive. And so you have a lot of cowboy mining in Russia with residents putting up, retail miners putting up relatively big considering that they're on the, residential grid, putting up pretty sizable fleets. And this was causing a problem with grid instability. And what Dennis, again, just to highlight what he said in this interview, and he's service clients in Russia. He's mined in Kazakhstan. He knows the region pretty well. What he said was this will not affect industrial sized Bitcoin miners, except for in the Irkutsk region. And I think there's one other where they're going to make them not mine during the winter months. So to make sure that there's enough electricity on the grid. So it's not really an outright ban. It's more like a ban on retail mining and unregistered miners. The one thing that he did say is that he expects to see miners migrate from places like the Irkutsk region up north to where there are a lot of large-scale gas and coal plants that currently don't have enough demand to soak up all the electricity. And he said we're already seeing miners migrate to that region. So another reminder that especially with news out of the East, like it's almost never what the headline says it is.
Yeah, honestly, you got to be careful. So this was like tweeted out by a few people. Like it was one of those whale accounts that are just infamous for doing this kind of stuff. And you have to go to the region and understand what's happening here. So the best way I think to follow this information is typically to find a few reporters that like work that area in the cryptocurrency industry. And you could typically find them on Twitter. Like I always follow Anna Badikova for this information.
CoinDesk. She's great.
She's great. She's actually been on the mining pod before. Really good stuff with her. And that's the best way of finding this information. Otherwise, like typically you just get the headline that, Russia bans Bitcoin mining. I think that's a headline I saw 3-4 places, and it's just like so incorrect. It's pretty laughable. And at this point, I'm just like immune to it. I'm like, I don't believe it. And that's why I think why the China mining ban one actually took a little bit for people to believe it. Because there was even like April 2021, there was a temporary like hiatus or ban in one of the regions in China for Bitcoin mining that was unconnected to the larger ban, which was about 2 months later. And that made people think that it wasn't real, but it's hard to follow this info because it's so localized. Yeah.
And there's like a huge language barrier and information barrier as a result. So
definitely.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
Let's bring up Karun from Compass. He's been coming on once a month. Welcome, Karun. We're going to go through the hosting segment. Compass Mining is, I think, the largest hosting company in the United States, and they have sites now, I believe, internationally. So we're going to go through some of their data. The hosting market's really interesting because you get a little more access into like the retail market, and then we can use that to understand like the Bitcoin mining industry more broadly. So Karun brought some stats from Compass as well. But Karun, welcome to the show.
Thank you. Hope you guys are doing well. Thanks for having me on. Like you mentioned, I think last time I was on was like end of November. And so overall, like the hosting market sentiment in terms of like demand, supply, and growth, haven't seen that many changes. With the BTC price action, obviously seeing that rise in demand for hosting. On the supply side, the market rates are still higher post-election in terms of like electricity and hosting. And then in terms of growth, still seeing miners that are seeking to leverage that infrastructure for either AI capacity or trying to vertically integrate. So I thought we could use today to kind of dig into some of the Compass data over the last 5 months to see if we can get any insights into the broader retail and enterprise hosting market.
Let's do it. Colin, do you have the slides to share?
I do, yes.
I thought I could share like 4 graphs, looking at 4 data points for our hardware and hosting sales from the last 5 months from August 2024 all the way to the end of the year. The first one is going to be the customer mix. So in terms of enterprise versus retail versus new customers over that time frame. The next one will be the average number of miners purchased per order. And then the last 2 are kind of looking at the efficiency of the miners for those new sales. So if we want to start at the first one, so the customer type. So at Compass, we categorize enterprise customers as anyone that has 125 or more miners within our ecosystem. And what you're looking at here is the breakdown of enterprise, retail, and new customers for each month over that time frame that I talked about before. So, some key takeaways from this graph is you're seeing retail and especially new customers kind of entering into the space, becoming customers of Compass as hash price has risen, from October to December. But before the election, almost a 50-50 split between enterprise and retail when that hash price was lower. Which kind of makes sense to us, right? Like as mining profitability conditions are lower, less favorable, you're going to see more of the enterprise clients but then as things become more and more favorable, retail is going to jump back in. So yeah, that kind of follows historically our assumptions at Compass that retail's back when Bitcoin and that hash price rips upward. And then another thing, I don't actually have it here on the graph, but in terms of like the actual miner count, so what I'm showing on this graph right now is just the number of customers, or sorry, the previous graph is the number of customers. In terms of the actual miner count, historically that split is more like 55 to 65% retail. But interestingly enough, we're not really seeing that trend here in the data, except for December, where in December, about 77% of the new miners were considered retail. Before that, on average, it was below 50% for retail. So again, dominated by the enterprise clients.
Interesting. Okay. And I keep going along here. Number of miners per order. Unless you want to get the next one.
No, this one's good. So one thing to note here is September is kind of an outlier. We did have lower sales compared to the other months. And so what we're basing that off of on our internal data is that we believe that's a local bottom in terms of the market sentiment for hosting. And, if you line that up with hash price, that is correlating pretty strongly there. So that's when we saw a local low in the hash price as well in that September. But just in general, post-election, we are seeing a lower number of miners per purchase order. And so again, that leads us to believe another indication of retail coming back. So when retail is buying miners, they're going to buy a lower quantity number of miners, if that makes sense.
Now, you guys also have a marketplace with Compass. So do you see like people capitulating during September, or any thoughts on that? Or like, do people kind of hodl their ASICs and wait for fair weather?
I'd say in general, retail is more actually likely to hodl depending on the quantity size. They're willing to take those losses, especially if it's only one or two miners when hash price is low and mining is not favorable. It's the enterprise customers that may be more likely to be delinquent or capitulate, as you said.
That's interesting. That seems backwards from what intuition would tell you. Why do you think that is?
I feel like retail customers are more likely to speculate. Right. Okay. So if they can weather those losses during those bear months, they're going to do it, with the hope that Bitcoin that they're mining eventually will be worth more than what they paid during those months.
And they might also be doing it more as like a hobby type thing rather than like the enterprise clients are doing it as part of a business venture, right?
Exactly. That was going to be my second point. Enterprise, they're purely might be looking at it as a business venture, as you mentioned. And so they're willing to cut their losses.
That's interesting. I just like kind of picture the hobbyist hosting miner just paper handsing and turning their ASIC over to someone else. Efficiency. So we've seen this with pubcos, which we track pretty regularly as well. Like there's a race to, that 12, 13, 15 joules per terahash. And it's cool to see the hosting market follow right along. A lot of these units are high efficient next gen.
Exactly. Yeah. So like the biggest takeaway is overall our sales are dominated by newer gen machines, right? And I think that makes sense. They're better performing, better profitability profile. So people are going to lean that way. That being said, if you're kind of looking at the month over month data, especially in the graph to the left, October and onwards, you see that the percentage of miner sales has dipped a little bit in terms of those newer gen machines, so XPs or better. And I think that makes sense, based off our assumption of retail kind of returning back to the market, because like I said before, retail will tend to buy a lower quantity of units, but also they'll buy cheaper units. And in this case, the cheaper units are going to be the ones that are more efficient units. And I think I mentioned this last time, but even at an efficiency of 30.5 for a J Pro, that's at today's hash price levels, a customer is going to be profitable even at market hosting rates. So, we're seeing that retail sentiment kind of returning and being okay with buying poorer efficient units than they might have been in August or September or even October.
It seems bullish. Yeah, there's like only a few pubcos that kind of do that. Core Scientific has leaned into it, like not necessarily refreshing their fleet and kind of buying the cheaper ASICs. We did a podcast, I guess, Twitter Spaces earlier today. And we're talking about this with Penny Ether about how like there is sort of that pressure on the more the next gen units, and like everyone's kind of buying those up. And so like if you do buy the less efficient ones, the older ones, you might get a pretty significant discount. And then of course the whole game is just about cash flows, like managing your cash flows over time, and like protecting that capital that you initially put in and trying to recoup that as fast as possible and then get more cash. Ideally, we're saying Bitcoin is cash here. Some people market in fiat. Colin, any thoughts on that?
No, I just kind of what I would expect to see. It looks like the majority of the market is trying to get, the next generation machines. Be curious to know which ones out of the S21 and M60 series they're going for in particular, but this is about what I would expect.
Yeah, and at Compass, we focus, I'd say, majority of our units are on the Antminer, so we're going to see more S21s in that case. On the graph to the right, one thing I will note, though, is looking at October to December, the efficiency is actually creeping up, again, indicating that retail is more likely to buy the poor efficient units, right? They're low cost, as Will said. And, depending on the conditions, could have a faster ROI.
Awesome. Well, I think it's the last slide, right?
Yeah. I guess last, I'll just kind of some final thoughts or takeaways, from this data. One thing to note, like as I said at the beginning, it is a limited data set, right? Only 5 months, especially with that September outlier data. So it's kind of hard to necessarily action based off this, but we're using it as kind of a overall market sentiment to kind of understand what are our customers doing. And based off that, we believe that, retail's back. That's shown, evidenced in multiple ways, right? The poor efficiency unit sales are increasing, the lower number of units per order in terms of the customer mix, that first graph that I had shown. And so then it begins to think about, why is retail returning? We think it's just the BTC price rally, the higher hash price, and then the last thing is just the availability of the low cost miner hardware. So if you're a host in the space, and you are focused on retail, you really want to make sure you provide retail with purchase options, maybe specific tools, like the ability to prepay hosting or put miners on payment plans, those type of things, so that during a bull market, you can kind of drive that sustainable growth and demand from that specific customer segment.
Any update on the new facility you guys are building in Iowa?
Yeah, so still on track for the 8 megawatts, and then with the expansion planned later in the year. I think we're racing, against the winter months and making sure we can build before it gets too cold out there. But last I heard, everything on track.
Awesome. Well, Corinne, thank you again for joining us. Where can we follow more about Compass or yourself?
Yeah, you can find me on LinkedIn, and then you can just go to compassmining.io and reach out there as well.
Awesome. A LinkedIn warrior. We love it. Awesome.
Guys.
Okay.
You,
well, let's jump back into some more Bitcoin mining news. I think I'm up next with this BitFuFu.
You are up next, and we've got BitFuFu. I'll get it up here in a second. Just an incredible name for a company too.
It's amazing. Probably my favorite name in the space. So BitFuFu secures deal for 80,000 Bitcoin miners with Bitmain. This is from our friends over at the Miner Mag. So I wanted to talk about this story, not only because it was a slow week, but I actually think it's generally important. They're aiming to get 1 gigawatt of capacity by 2026. And they're putting on a lot of the next gen units that we just talked about, S21 XPs, S21 Pro models. This is going to bring them up to 30 exahash under management. Would contribute about 21 exahash. So why does this matter? Well, if you look at Bitmain, they have all these different services and things they do. Like most people are just thinking about them, building ASICs and shipping them out to pubcos, shipping them out to miners. But it's not only that they do. They have a lot of repairs. There's like a lot of investments into silicon, and of course there is the different mining arms. And how they've kind of pursued that during the bear market was mostly through these JVs. At least in the United States, is through a lot of JVs where they would have some sort of pubco or some sort of private company that they're working with, and they create terms to give the units to them, or find places for them. BitFuFu was one of the ones that was known about, and people have been tracking it for quite a while. Kango was the one that popped up recently, and we reported on that here on the Mining Pod. And so you can kind of see that like there's these different tentacles, these different business arms that Bitmain has been moving out. And this is specifically for its self-mining, right? And for self-mining, you'd ask like, why would they want to move this outside the company? And it's a good question. I think it's one that like a lot of people who are in the space, researchers and analysts are questioning, like, why is Bitmain trying to move some of its assets out of itself? And there's probably a few ways to think about it. The one reason I'm thinking about the most, well, there's two that I'll think about the most. One is like the reports relating to Sofco, a company that Mikri, the CEO of Bitmain, also is CEO of, and Sofco is rumored to be on the docket to get sanctioned. And people have questions about if Sofco is sanctioned, is there going to be repercussions for Bitmain, and what's the relationship like that? And so is Bitmain spinning stuff off just in preparation to like protect itself? Now, a lot of these things are just unfounded rumor mill. We don't know. It's just pure speculation. The other reason is like they've just been in the business of creating ASICs. They had a glut of ASICs and they shipped them to the United States or other places for cheap. They created venture arms for these things or different companies. And now it's time to sell them off and create different companies and get rid of those assets. And I'm more likely to believe the latter at this point until I see better evidence for the former, because I think it makes sense. Like Bitmain made a ton of units. There was a glut of ASICs on the market the last few years, and they could sell them to these JVs or to these pubcos and make some cash back, probably multiples on what they built the units for. The one thing I'll note on this before I hand it over to you, Colin, is that like there was quite the price premium for this purchase. It was like $20 per terahash or something like that, which is a little pricey versus the rest of the market. And it sort of hints at the relationship between BitFuFu and Bitmain. And like, is this really going to be something that BitFuFu shareholders appreciate, that, you know, they basically paid a premium because they have a relationship with Bitmain? You'd expect it to be the other way around, or hopefully be the other way around.
But Bitmain wants its bag, right?
Yeah.
And going back to the rationale for peeling off some of these, you know, business lines, I think the simplest explanation, and just, you kind of touched on this with yours, is just optics. Like, it doesn't look as good when you have all of this concentration from the pool level to the ASIC manufacturing level to the actual self-mining level with Bitmain. And this is something that Bitmain's done, has been doing for years, right? You know, famously, Antpool is a Bitmain affiliated mining pool. And back in the day, before the China mining ban, Bitmain really had Antpool as the largest one, and then via BTC and BTC.com. They were all in Bitmain's universe, right? And I think that that's what we're seeing here, something similar. I think it's also a good reminder that all of this stuff has kind of been going on in the background anyway. And now Bitmain is trying to find ways to cash in on some of this, you know, on some of these efforts, right? First with BitFuFu, which it partially incubated and, you know, went public via SPOC recently. Now potentially with Kango, regarding the fact that Kango bought the ASICs in a Bitmain facility. You know, Bitmain trying to find ways to go public where it otherwise couldn't, because they had IPO aspirations years ago that never materialized for reasons that I don't quite understand or has never been really satisfactorily explained to me. But it doesn't surprise me that some of this stuff, kind of to echo one of the analogies you gave earlier, it's like how far do the tentacles go? You know, like what else are they touching in the industry? So definitely something to keep an eye on. One other thing about the BitFuFu deal, gives them a lot of optionality. You know, BitFuFu does hosting, cloud, and self-mining. They're kind of like BitDeer in that regard. Cloud mining is probably not the best game right now. I mean, it's a little bit better than it was after the halving, but still, like, margins are very thin. So it's got to be difficult to sell those contracts unless you have some sort of event like we saw over the summer with like Fractal Bitcoin, or sorry, we saw a few months ago with Fractal Bitcoin. But a lot of optionality here. They also mentioned that they might sell this to some of their hosting clients, some of those allocations. So a lot of flexibility, a monster order. And to your point about the $20 per terahash, you'd think that maybe they would get more privileged terms, but, you know, who knows?
Maybe not. Maybe not. Sometimes it does not pay to be closer to the tap.
No, because the emperor always wants his tithe.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
A miner that's embroiled in a lot of issues currently, and that is Rhodium.
Yes.
There's a lot going on in this headline. Rhodium sold Temple Bitcoin mine for $40 million. Co-CEO departs. There's also another news tidbit here that I actually think is bigger than just the sale of the Temple site. We'll get to that in a second, which is Rhodium reaching a victory in its ongoing litigation with Whinstone, Riot via Whinstone, I should say, on hosting contracts that it had with Whinstone that Riot inherited after it purchased the facility from Northern Data. So for context here, for those who don't know, Rhodium Enterprises filed for Chapter 11. Blockspace broke this story in August last year, and they also have a number of lawsuits outstanding. They've been in litigation with Riot for years over this hosting agreement. They also recently have been sued by some of their investors in a story that Blockspace also covered a couple weeks ago. And so there are just all these court arbitrations going on currently with Rhodium. And the one that Wolfie at MinerMag covers in this one is the fact that they sold their Temple site, which was their self-mining site in Texas, for $40 million in cash, $40.6 million, as part of their Chapter 11 restructuring. Their co-CEO has also been dismissed, though some of our sources said he basically was forced to resign. But, there are optics with all these things. That co-CEO is Nathan Nichols. And then the other big thing here is that Riot and Rhodium recently there was a decision made by the judge in that case, where the judge basically said, I'm going to try to find a way to package this because it's kind of complicated. The judge ruled in favor of Rhodium regarding a contract dispute that Rhodium has with Riot. So Rhodium entered into a hosting agreement with Whinstone when it was still owned by Northern Data in 2020, in I think July of 2020. That hosting agreement was altered in December 2020, and there were a few provisions that were struck from it. And what basically happened with this court case is Rhodium was making the argument that both of those contracts should be read as two separate things, but also both as being valid, basically arguing that the December 2020 rewriting of the contract was not a rewrite, but just an additional thing. And the judge ruled in favor of that. And Riot was obviously arguing the opposite, saying that the 2020 contract should be the one that is considered truth. Now, this has potentially some big ramifications for this case. So this was just the decision on the contract. The second phase of this litigation will be over who owes what as a result of this. And there's a bunch of stuff behind the scenes on this. We're hoping to do some follow-up reporting. Don't want to give away the goose too much, but there could be some ramifications with regards to some of the power plays that Riot makes. And Rhodium may be entitled to some compensation as a result. So pretty big story because it involves one of the largest public miners in the game. Also, that contract that Rhodium has with Whinstone, we've had sources tell us that it's in the ballpark of like 1 to 2 cents per kilowatt hour, which is insane. So a huge hole in Riot's operational budget because they're making out like bandits on that rate. But that's kind of the high level overview of that. I don't know if you have anything to add, Will.
Yeah, I mean, just that Rhodium contract, that Riot contract is amazing. Riot purchased this site from Whinstone. Whinstone built it up, and then Riot purchased it, and that gave them a locked-in rate of around 2 cents. I don't know the actual rate off the top of my head. Maybe you might know it, but it guaranteed that rate for 10 years into a power market that is growing crazy. So many people are moving to Texas, and who would have known that like COVID would have moved so many people to Texas? And so the average price of power in Texas goes up, but Riot is locked into that low rate. And any sort of hosting provision that was there beforehand also locks those people into that rate. It's to Riot's benefit to get any sort of other hosting partner in there out, because they're just losing money on it. It's the benefit of those investors. I mean, it's almost like these hosting relationships can be very parasitic at sometimes, right? Where you want them out, but you can't really get them out. And at the beginning, it can be nice because you can share costs of building the infrastructure and those sort of things. But so many times this industry, these things go south, and we often get like emails and people reaching out to the mining pod asking like, hey, I want to set up a mining company. I don't have the cash to do it. I'm thinking about doing this or that with someone else. And I always caution, like, be very careful when you're setting up a JV. And if you have to do a JV and you want to mine Bitcoin, like, first of all, ask yourself if you want to mine Bitcoin. Second of all, if you want to do it, make sure you really have clear terms and provisions to get out of your contract, because it can get messy fast. This is going on for years. There's hundreds of millions of dollars at risk here for both parties. And this is not over yet. And people have already lost their jobs, and it's still not over yet. We still have to find out what's going to happen with this lawsuit from the creditors. But messy and interesting. I'm looking forward to more discovery as the court case proceeds, because it's going to tell us more about like the ERCOT market and how these mega miners can kind of operate on this grid.
100%. All right, Will, cry corner time.
Dude, this is all you. 100k Michael Saylor party was over the last few days, and our honorable podcast editor was actually a guest to the party. We won't dox him, but he was in attendance, and I heard it was fun. But yeah, there was a lot of people complaining that they didn't get to attend.
Look, here's the deal. The thing is people were bitching about it because they didn't get an invite, and maybe there are some high-minded people with some kind of sanctimonious takes that legitimately believe that it would be better not to be invited to a party with quote unquote shitcoiners. But a billionaire invites you to their New Year's Eve party, you're going to go. You're going to go. I'm sorry. I don't care like what you say you would do. You're going to go because it's a billionaire and he's inviting you to a New Year's Eve party, and that's going to be fun. And so the reason why I chose this is just because I thought on one front, it was a little bit nauseous how many people were posting about it. And it was almost this kind of like this FOMO injection of like, oh, like we're in the back of the bus with all the cool kids. But then on the other side of that, you had all of these people freaking out about it. And so you had takes like this, or is it, sorry, Anon, you were simply not publicly retarded enough to get into the 100K party invite. Pierre Richard, wholesome posting with his wife and Michael Saylor. That's nice. If you're an adult and mad you didn't get invited to the 100K party, congrats on never leaving high school. All this shit literally never ends. That's a good take. I usually don't agree with Stony Bitcoin on a lot of stuff, but I think that's kind of where I'm at with it. So I don't know. There's not really much else to say about this. I just thought it was really funny how many people got butthurt about it. And there were just so many insults and so many reasons why people say they were happy they weren't invited. And I was like, no, you're not. You wish you were there. You wish you were there. You wish you could walk, saunter onto Michael Saylor's yacht and drink, 100-year aged champagne. And so
they age champagne. I didn't even know that.
Yes,
I'm not cut out for these parties. I mean, there's definitely like a Bitcoiner class. Like there's a group, there's different like cliques in Bitcoin, which is so dumb, but everything is just high school grown up. And I think that when you don't get invited to a party, people get upset. I did hear, and one of the complaints, and I thought this was actually what you were going to do the cry corner about, was how many like coiners were at this event.
Oh yeah.
Altcoin Daily was like the live stream for it. And he was talking about blue chip meme coins on the live stream.
Yeah.
And I was like, what? So I think this was more of like a Miami party than it was a Bitcoin party. And those are very, very different things.
Yeah, it's hard to say. I think there was a good mix. The Altcoin Daily guys are funny too, because I met them at a conference a while back and they were trying to like rebrand to like be Bitcoin only content, but their name was still Altcoin Daily. I don't know, maybe they've gone back. I mean, everyone eventually realizes that during the bull market, the most money is in shit coins, right? So
yeah.
But blue chip meme coins is a pretty funny, it's like a really funny concept.
Doge is the only blue chip meme coin in my book.
Yeah, but WIF getting up there. I legitimately think that WIF will be like one of those that sticks around for whatever god awful reason.
I'm gonna check the WIF price just for fun.
Or Peanut.
Oh, WIF's been down, dude. WIF is down. WIF is out. Okay, well, it's been fun to jump in the news roundup seat with you once again. If you enjoyed this, go check out our other shows, Bitcoin Season 2. You can find that on Apple, Spotify, elsewhere, or the Gwart Show, GWART. That's a show on all things, I guess, like Bitcoin Think Boy is how I like to talk about it. That's on Sundays, kind of larger conversations around like what actually matters in crypto. Also find that in Spotify, Apple, YouTube, elsewhere. And then check out our newsletter, the Blockspace newsletter. Colin's been doing some awesome pieces for our Wednesday mining newsletter. So go check that out. Newsletter.blockspacemedia.com. Colin, anything else before we log out?
No, that's it. Happy New Year, y'all. Hope everyone had a happy holidays. And let's get it in 2025, guys. Time is now.